Wonderful good day, ladies and gentlemen. We are still at the PDSC 2016 here in Toronto. The floor is closed now, but we are here at the offices of Sierra Metals. And this is a polymetallic producer out of Mexico and Peru. And we have here Mark Brennan, the president and CEO, and he will us show around a little bit about the company. Mark, great that you have time. Thank you very much.
Thank you, Joachim.
Sierra Metals, what is this company about?
Well, Sierra Metals has three mines, as you mentioned. One in Peru, our main mine called the Yaracocha mine, and we have two mines in Mexico in the state of Chihuahua. We are a polymetallic producer. We're producing about 12 million ounces of silver equivalent, and we're producing about 80 million pounds of copper equivalent.
Oh, wow, that's a lot. Any other products you have? I mean, silver, copper, that's for sure, but like gold, etc.?
We have them all. We have 5 concentrates in Yaracocha. We're producing silver, gold, lead, zinc, and copper.
Wow, well, fantastic. Well, those are all the high-tech metals we need. Great, sensational. How was your last year? I mean, you had a lot of success. You had a discovery. We want to talk about that in a minute. But how have you, I would say, fought back the shrinking metal prices? What have you done? How have your mines done?
Last year was a year of two halves. In the first half, we had record production in the first quarter, record production in the second quarter. And as we went into the third quarter, we entered into a restructuring where we could take production to the next level. Particularly at Yaracocha. So what we've seen at Yaracocha has historically produced at about 2,500 tons per day, or about 75,000 tons per month. And what we're looking to do is take that up to 3,000 tons per day and in the near future, and then take it higher than that. So what we needed to do is to come in and modernize the mine. It had been run a little bit like a private company and using the techniques and technologies of the 1970s. So what we need to do is come in and really ramp up the production.
So get rid of the old-fashioned stuff.
Get rid of the old-fashioned stuff. Bring in the 21st century. And the nice thing is it'll enable us to grow very dramatically.
Fantastic. So I said it already. The discovery at Yaracocha, right? Not Yaracocha, Yaracocha. So tell us about the discovery, because I saw some really impressive numbers.
Yeah, for sure. Now, one of the things with the company being run as a private company, the negative side has been that we have to shore up the production side, but also it means that they haven't spent money on exploration. And in Mexico and in Peru, we see just tremendous opportunity to grow through exploration. And I'm not talking exploration that's out miles away. I'm talking immediately within the vicinity of the mine. And so what happens is we have a fantastic new discovery that we put out a press release in January called the Esperanza Discovery at Yaracocha. This is a very, very significant discovery. It has the potential to transform the company with respect to its production going forward, and also grades and also quality in terms of value per ton. So it's a remarkable discovery. We're at the very early stages. Our press release that we issued at the end of January essentially shows the proof of concept, and now we need to drive it forward. It'll probably take us about 12 months to complete the exploration, but because it's so close to the existing mine, we're only looking about being 100 meters from where we're working underground.
Wow, that's nothing.
It's nothing. It's nothing. So we will be bringing it into production in the third quarter of this year. So we'll be exploring, we'll be delineating, and we'll be producing all at the same time. So you should see a very good move to higher grade material in the third quarter, and really that'll start to peak. We should get really substantive production starting in 2017. So we see is for the next 5 years, this Esperanza discovery, even if we discover nothing more, will give us very, very strong cash flows for the next 5 years.
Fantastic. And also I estimate that you can use all the existing facilities. You mustn't do anything in addition?
No, it's only development capital that we use in the central mine anyway.
Fantastic.
So there's no new CapEx that is associated with that.
Fantastic. When we are talking anyway about CapEx and costs, let us come a little bit more to the financial numbers maybe, because as a producer it's important. At what cost are you producing, like an ounce of silver, for example?
Well, currently on an ounce per silver basis, we're probably running on an all-in sustaining cost of about $12.50, and our expectation is, historically we've been about $10. This restructuring has meant that we've lowered the number of phases that we're producing from, and we've had water issues to deal with. But once we're complete, we expect to go back to that $10 level, which again I think will be complete by the end of the second quarter. And so starting in the third quarter, we'll be moving back towards that target all-in sustaining capital cost production of about $10.
And the $10 they yield for all the three mines?
That'll be for Yaracocha.
That's Yaracocha, okay.
Consolidated average I think will probably be a little bit higher, but basically around the $11 mark, so not too much higher.
But that means you still make money.
But we make money. Yaracocha and Sierra Metals has always been a low-cost producer. And again, we need to shore up the old operations, and when we bring it to new operations, they'll be back to being a very low cost producer. But even throughout this restructuring, we're making money, which is very positive.
Fantastic. Let's take one more question with the numbers. What is debt in the company? What is cash position? I mean, are you safe in the thinking of that you cannot pressurize, from any side?
We have a very strong financial position currently. What we're looking at is we have essentially, as of the third quarter, now we will publish our year-end results on March 25th. So we're still using the third quarter numbers. But as of the third quarter, we had EBITDA of about 35 million. Our total debt position was about 77 million. We had cash of 35 million.
Okay, that's healthy.
We essentially our liquidity availability is probably running about $50 million. So from that perspective, we have lots of available cash if we need it. But at the same point, we're being very conservative. We want to maintain a cash position of $20 million at all times. So from that perspective, we don't see a lot of pressure. The debt that we have is all sub 5%, and most of it runs in the 4 to 4.5% mark, which is very manageable. And 25% of that, 25 million of that debt is actually a 5-year bullet payment due in 2020. So from that perspective, we're not paying anything aside from interest on that right now. We're in a very, very good financial position, but we're being very careful due to the commodity prices environment we're in today.
Absolutely, and I think we are getting now the better times, hopefully, and this goes on, so you would be in a much better position. Can you pay the debt back at any time, or parts of it at least?
There's repayment schedules. We have the normalized repayment schedules, but we can advance our debt repayment should we choose.
Super. That's fantastic. It gives you good flexibility.
Very good flexibility. Yeah.
Fantastic. As 2016, you said you bring your numbers out on 25th March, but as we move on with 2016, where do you see maybe the biggest challenge, and what do you want to have really achieved in 2016?
Well, unquestionably, the biggest challenge will be the first quarter, which we're undergoing right now. And basically what's happening is the restructuring at Yaracocha is probably at its most, is at the transitional point where essentially we're just going to come over the curve now, where we will completed most of the critical expenditures, most of the critical downtime with respect to mine zones, and now we're going to be able to bring them back up. And once they come back up, we'll be in very good shape. So that'll be the biggest challenge that we have. Second thing is the discovery at Esperanza. Our budget that we have for 2016 is for limited production in the second half, and we're really trying hard to aggressively drive that production, which we believe we'll be able to do. So those are the two challenges, and again, financially we're in great shape. We're probably a little bit ahead of, we anticipate we'll be a little bit ahead of budget for what we had for the first quarter, even though it will be our weakest quarter. So from that perspective, we're pretty comfortable. So
things are turning better and better and better as it moves on.
I think I like to say the company is positioned in better situation than it's ever been. And again, as we move forward, we expect to see a lot of very, very positive things.
Fantastic, great. Let's assume the metal prices are going more up. Let's assume copper goes again to the $2.80, $3. Silver goes to the 20. Yeah, I'm doing a little bit hypothetically. So that would mean with you 12 million ounces producing silver equivalent, we can easily say you make some 50, 60, 70 million dollars per year. Just an estimate.
Yeah, no, for sure. If you look back at 2014, our production in 2000, our EBITDA and cash flow, which are pretty much the same, are running about $65 million. And I don't see any reason, with Esperanza, I don't see any reason why we can't move back to those numbers with current commodity prices for 2017, 18 forward.
Yeah, exactly.
So prices going back to the areas you're talking about, we'd be doing pretty well.
Exactly. That's what would be my question then. Would you consider to pay a dividend?
I like the idea of a dividend, and the fact is the company has historically paid dividends. We stopped paying a dividend when we started to get into a climate where metal commodity prices came down.
Which makes sense, absolutely.
I think right now we're in the mode of conserve cash, hold on to as much as you can, and wait for the storm to move on, and also bring your costs down. And so another added benefit of what you speak of, higher commodity price environment, means that we would have substantially altered our cost structure. Which any leverage to higher prices would dramatically increase our cash flows that we would have had previously.
Great, fantastic. For the future, any more targets you have here, or you want to say, no, we stick now with the 3 mines, we grow organically, or can you imagine, let's say, Is there a fourth mine in the
We've looked,
universe?
I think the fourth mine is going to come from Esperanza.
Okay.
And I'll say that, we've looked at lots of different acquisition targets or M&A targets. And for us right now, Esperanza has the capability to be a real significant contributor and far better to acquire ounces or resources from our own properties. In size than going out and having to pay for those ounces.
Absolutely, yeah.
So again, I think in terms of the what we're seeing with Esperanza is we're seeing much higher grades, we're seeing lower cost production, we're seeing much wider widths, and so as a consequence, the value of the rock is significantly higher than what we have today. And right now, we don't see we think this has the capability to be a very, very large target. And so as such, we don't see any need to go elsewhere to look for commodities.
Totally agreed. I think this makes also sense, honestly, because I like it also when companies grow organically, because there is no adventure type. Yeah. So that's always important.
Well, you remember, Joachim, we met last fall when we were in Zurich, and I mentioned to you at the time that this was a strategy, a very determined strategy. There was lots of opportunity for brownfield. Now, I don't think we ever expected to get something as strong as this. So at Yaracocha, this could be a game changer. It can transform the company totally. But it's early stages. I caution, it's exploration, but it looks very good. In Mexico, we also saw the same. We're seeing the same thing with respect to exploration potential. Now, the value at Bolivar in Mexico is not nearly the value we'll find at Yaracocha, but it's still very significant. So we have enough work and enough resources to add at our own properties as opposed to going and looking for other properties.
Yeah. So maybe you should rename Esperanza into Bonanza.
Something to think about.
No, great. Mark, fantastic. Thank you very much for this update, and I really appreciate it. And I think, it's phenomenal what you have, and important, as said, organical growth and healthy growth, and looks like you're in good shape.
Jürgen, thank you very much for your interest. We certainly think so.
Thank you very much. Ladies and gentlemen, it was Mark Brennan, the president and CEO of Sierra Metals. And you heard it, 3 mines in production. They have all the healthy metals we need for all those technology little gadgets named like iPhone, like Tesla cars, etc. And so the demand and the appetite in the world is there for zinc, for lead, for copper, for, of course, gold, that's for sure, and silver. And this is what a company is producing. They are in, safe mining jurisdictions, Peru, Mexico, wonderful places to mine. And you heard it, over 12 million ounces in silver equivalent. I think that's a nice number to have. And the costs are approximately at around $12.50 all over the 3 mines. So still making money. And with prices going up in the commodity world, this company will make a fortune. Check it out. Thanks and bye-bye from Toronto.